Hey, what's going on, everyone? Welcome back to the channel here at AB Trades. As always, in these watch lists, I'm pretty much breaking down the names that I really like headed into the week ahead and just the things that I'm watching with a bit of education in between and kind of my projected analysis on it. As always, if you'd like to receive the list of names before my video gets released, maybe 1 or 2 days before is usually kind of what I do. So far, I've been very consistent with posting them every Friday. If you'd like to receive them, though, make sure to follow me on X at AB Trades. That way, you're able to see the names that I like and maybe go in and do a bit of your own analysis to then compare and contrast to mine. I think this is a really good form of repetition in terms of building blocks within your own style to then see what you missed, what you actually had, similar to me whenever my video does come out. And I think it's a really good building block to kind of level up your own game to see what it is that you're missing, what did you build on that I didn't, and that way you can kind of figure out where you really want to mimic my style to kind of combine with your own. So without further ado, let's not waste too much of your time with this intro and let's go ahead and get started. So first up on the list is GFS, Global Foundries. And the reason I really like this chart is so like we can focus a little bit on the daily and maybe the 4 hour here in a bit, but I really like this daily because of how you've kind of been funneling within this daily in terms of the actual integrity of its structure. So if I come in here, you have a nice higher low, higher high, higher low, higher high, right? But then you do this. But now let me ask you something. As you start to build into this, what's still respected, right? So if I drag this out, the overall external dealing range is still being respected within this little component of price delivery, right? How you then start to, oops, how you then start to kind of engineer in a sense or like consolidate while you respect the overall structure, right? And what I like about how this kind of built internally within that overall higher time frame structure is the fact that we got one driver, two driver, we got a nice three driver on the lower time frames into a gap and breaker. And look at how well price respects that. And then you get a gap up with displacement. Now you had another gap up here through previous week highs, but you know what? When we have these type of externals, we can usually anticipate some form of like consolidation within. So that's why I go back into the 4 hour because look at how this is now delivering out, right? This gap here that kind of prevented us from really getting any continuation is now actually seeing some pretty decent follow through. Now, I wouldn't be surprised either if there was still some kind of external raid where you do this and run up, but the way things are looking, right, based off of this weekly, you have now a very clean and supportive volume imbalance, and you have a daily displacement through previous week high that also has confluence. So buyers right now have a lot of confluence and momentum to continue price up. So if there's no like external range back into like maybe 80 through about 78, then I would like to see this go into that completion of the gap first up into about 90 and then maybe some reversal that gives you a little bit of a small retracement, but overall completing its move into 95 and 100. Looks really, really good. A very slow mover, but I think once it's ready, it's going to give you a really, really pretty expansion here. Next up on the list is Ford, and I will show you, whoops, the 2 day real quick, just so you have a better view. We are coming into a really nice higher time frame breaker that price struggled to break for like the longest time, right? Look at this. This dates back all the way to 2024. Look at what it did, and look at what it did back in August. So for me, it's like this is the first time we actually break that since 2, 3+ years ago, right? This was a huge higher time frame breaker. And so for us to break out of it and only get maybe 1 to 2 weeks worth of continuation, I really feel like now we're entering some form of broadening that still respects the integrity of this structure. So when I go back into the daily, I really like these subtle little sweeps that push you back up into the overall alignment of your optimal trade entry. And the structure's still clean, right? You're just getting this a bit more of an aggressive downside, but this retracement still conforms to the integrity of this higher low. So as long as I personally believe, even if you get a dig down into like 13, but they push you back up, I think it could be a look below and rip type scenario. And I think now you just want to see this kind of base out a little bit above that 13.4 and eventually get you a nice move up into that. And again, you also have a bit of a little internal broadening going on here. So it wouldn't surprise me to see this go up into like 15, maybe a higher low, and then rally back up into a pre-ER run up. But I think it's looking really good. Price has come back into a very nice area of discount. The daily swept the previous week low and then eventually climbed back above the previous day close as well. So I'd really like to see them continue to defend this and base out to get you a run higher. Next up on the list is RKT, Rocket Companies. And what I actually like about this is we'll start on the 4 hour here. I really like the fact that they used FOMC as your manipulation candle to fill the gap. And then they wicked it back up, and then look at what the following day did. You actually opened higher than where you closed and immediately got that directional move back into a previous day high sweep. So you went outside day on FOMC into a gap fill, and then the next day opened higher and just climbed up and almost had a full body close near the highs. This is really good to see, and I think if there's no like immediate push through about 14.8, I think RKT kind of consolidates above this a little bit, and I think this could be a really good form of a reference point because it does act as a lower time frame breaker and gap that should technically support buyers. So I think as long as we can defend and keep daily closes above 13, I do feel like this development will lead you into a new higher high here on the daily, followed by maybe a retest of that zone that eventually trades up into 15.9, 16.6, and 17. Right, this is my overall target, and there is a bit of a more aggressive target, but I can't fully address that until we maybe get back up into like 15, 16 area. So we'll see how that progresses. There was also some really aggressive call flow that came in for July positioning for this. So I really like how this is looking, and I like how much it respected that gap and ended up climbing higher. And if we do sweep those highs here at 1470-ish, then it does set up a new change of structure for how this has been trading within, the last few months or so. Because if we take this out, then our targets become our previous lower high pivots within this potential higher time frame LRLR. So price could easily just run through all this very easily. Next up on the list is similar to GLW, similar structure, and this has been something that I've actually covered a few times within my watch list, and I've been talking about this for probably around a month now, and I still think the integrity of this delivery wants to run up into 230 and 246, right? Look at this, right? You're still respecting your breaker where price failed to push through, that then created a gap. And this gap within this manipulation low into this expansion high has now been consolidated within that range with a really nice look below. So you can see where this low here had been, and look at where they sweep. You get a really nice look below, push back up, exhaustion, meaning failure to reclaim. So you're still being range bound, and then you get a gap up with displacement into a previous week high. So this becomes a really good reference point. Maybe look for some kind of early weakness that then builds out. But for the most part, I really do think we should all probably have some kind of like 250 calls or something, because you've been stuck in this dealing range now for about a month and a half. So you know what the saying goes: the longer the base, the bigger the break. And so we've been consolidating for super long. We've been absorbing both sides within buyers and sellers, and the auction right now is definitely looking for an aggressor, and I think price trades out the same way it traded in. So if we do this, I'm definitely anticipating something like this. And look at where it pushes you up into that 230, 246. Next up on the list, and I won't spend too much time on this as I've already covered a good chunk of this, is SOFI. And again, really nice weekly gap up. You did fail towards the top end of that. Like the mid 18s has been very hard for SoFi to break for like the last 2-3 months. But I really like the delivery of how we attempted that. We had a really nice weekly and daily gap, and it's just all about where this price delivery is occurring, right? All this absorption, all this consolidation is occurring within your monthly dealing range. So from this external low to this external high. We are at the most optimal trade entry for this to potentially find some expansion. And I really do think, based off of how this is trying to trade, right? I really do think, for the most part, we can get a full run up through 20 and about 21.34 before maybe finding some rejections, right? Earnings are coming up within a month, 2 months, but I do really, really like where this weekly is, and I think we can definitely hit 20 before the next ER. You've been consolidating really, really nicely. You're still pretty much respecting the integrity of this monthly dealing range, and we are at a really good point of entry here for that weekly discount. We have a nice daily and weekly gap up. We respected the daily gap down here after building out for a few days. Now I really want to see this expansion take you up into that 20. Next up on the list, we got some fresh new ones here is Dash. And this is going to be very, very similar to the next one I talk about. But I really like the back-to-back outside days here. And I like the fact that these outside days are occurring at a really nice daily breaker here. So you can see where price could not break, price could not break, price could not break, price could not break, right? All those reference points became a really nice flip zone. And that flip zone is now occurring at a previous week high paired with a really nice daily displacement candle. And we are now creating a really nice internal broadening within this area of higher time frame confluence that I personally do think, because we're coming off of a really nice sweep 146.81 before we took it out. And then look at how price redelivers after that. So now I kind of want to just see Dash kind of build out here. It could still do a little bit more, but I do think this wants to make a run up into about 185 and maybe even as high as 195. Okay, I just really like the components of how price is delivering, and so when I go into this next chart, it's very similar. Uber had a really nice Wyckoff accumulation sweep that ended up resulting in a really nice displacement up, and now you're just kind of staying above. So I think as long as Uber does not get a daily close under 68.37, I think it does something similar to what Dash is trying to do. And I think if it can respect that 68.70 zone, this could be a really good higher low that indicates your first start of a inverse head and shoulders, and it creates your start of the buy side curve, which would give us expansion up into 77 and 80. And every single iteration of this range here has taken you back up to the top end. So now with this potential sweep and this little rebalance with a gap, a supportive gap, it could be your higher low to then indicate buyers back up to the top end of the range. Next up on the list is RCAT, and this is a really clean chart here. Again, all I did was take into account my entire dealing range here that actually did take you into new local highs. So you have this from the higher time frames, and now you're building here. So if I drag this out, you can clearly see, based off this visual here, how you go from a lower high to a lower low into an aggressive higher high that then pushes you back down into your point of interest for your optimal trade entry, right? I like to trade discounts. I like to get in on red days when most are actually afraid to potentially buy calls, right? You see red and you think more red, but that's actually not the case. Things will look bearish before they turn bullish. Things will look bullish before they turn bearish. And this narrative alone is what helps me position during these times of weakness, which gives you the best discount, right? It gives you the best entry point as long as you are staying true to the overall structure. If you know what price has done, what it did to get there, and what it's likely going to do based off of your knowledge of how that structure looks, you can usually get really good risk reward trades. So when I look at RCAT, it's doing something very similar, right? You just came in to fill up a lot of this gap, and look at the confluence of this gap, right? Not only is it an explosive gap, it's your golden pocket of this aggressive dealing range. It's also a 4-hour breaker, and I really like how you're staying within this range with subtle sell side raids. We've only really attacked those external lows into the gap. So I think as long as we can hold and stay above this like 9 through 11, I think it's setting up for a really nice move into about 13, 14.3, and maybe even 16 if it really wants to, go from a higher low to a higher high. Next up on the list is RDW. And again, this one is very similar to RCAT, except this is another space name. And there's just been some pretty interesting lines coming in for these space names. And I would not be surprised to see one more sweep, because this is in a little lower time frame sell model where you have consolidation, breakdown. So I would not be surprised to see this go for a little manipulation sweep that then pushes up and eventually climbs back up. This is kind of how I would project this. But again, it's the same thing as some of the other trades, right? I'm just looking at the overall dealing range. I'm taking into account the current structure that it's in. So this is obviously in a bullish order flow, but price has now returned into discount, right? We're putting in some decent lows. It's just now all you really need to do is go into the 4-hour and address those consolidation. And like you just need to reclaim. So this probably won't make a new low if you get an aggressive recovery through 15, right? But if you can't get a recovery through 15, all you're doing is creating absorption for one more manipulation low into this gap. So like 11 through about 12.8, I think can be the best entry possible with the lowest amount of risk. But if you reclaim that, then you probably do this, then return, and then go. So this is just based off of the scenario that this consolidation gives you one more manipulative low, and then all you need now is create expansion, because you're setting up a very clean like trend here, and eventually it is going to break once you get some proper volume. Similar to RDW, RKLB, same thing, right? Same freaking thing. Look at this, guys. Look at how clean you're still respecting your optimal trade entry, and look at the confluence that exists here. You're getting a rebalance of orders, right? Your last known aggressive candle that took you into those explosive highs. We know because of how fast price moved, it left a lot of unfilled orders. You also had a really nice breaker that actually prevented price from furthering continuing this move back in January, exactly at 99.58, before you got a really nice retracement by almost 40%, probably a little bit more, that then found recovery through. So this is the first time you're actually retesting that external high there, and you actually tapped it to a T, right? 98.58, and look at what this low is, 99.61, and how well it's being respected. So again, it would not surprise me if there's still another like manipulation low, but for the most part, I really like the entry points for some of these space names. I think they're offering really good reward. There's also been some good call lines coming in. RDW had call lines for August. RKLB is also having call lines for September and end of summer as well. Like, they're getting some repeated hits, and I like that those repeated hits come into these confluence points. Something I want to remember and bring to your attention as well is don't forget that I posted a really informative infographic on X and in my Discord community at 8x Trades that covers a lot of the checklist or metrics that I personally look for when I'm looking for these potential new trades, right? And the more you can check off, the better that trade will be. So go and check that out, download it if you want. But a lot of these names have similar attributes. Next up on the list is Everspin, MRAM, same thing. The entire dealing range, look at what price is doing. Now, when I go into the 4-hour, this is something that's actually neat, because now look at what's occurring here. 1, 2, 3, and then look at what it's followed by. Whenever we enter our points of interest, or if you have a level there, some form of demand, supply, whatever it is, some reference point, discount, doesn't matter. What matters is how price reacts when it gets there, and what does it do in terms of delivery. So I really like that price slowed down. You didn't get actually any continuation, because like look at all these aggressive moves, right? Displacement, failure, you get gap downs, displacement, versus when you finally got into that point of interest. Now look at what price is doing. Price held and then gapped up, and now look at how it's been consolidating here. So I like the fact that we are now actually displacing out of our discount, and we did it with a form of a nice gap. So for me is like, if we can continue to balance above like this 24 zone, right? I think it gets ready for a nice push up into at least 30 before it retraces, and then it figures out if it wants to go higher or not. But I really love this internal building, and I think it's going to stay true to how this daily delivery is looking, and I think you can get a pretty nice move out of this. Next up on the list is NVIDIA, something that I actually don't really cover much in my watch list, but going into the daily, I really like how you came back to rebalance, and what's clean about this area here is that it's actually overlapping inefficiencies, which gives it a bit more merit behind how well it can actually support buyers because of how it was created. And when I zoom into the 4 hour, I like that this gap got filled using FOMC as your volatility or like manipulation day, and then look at how price follows afterwards, right? You closed down here and then you opened up a lot higher, so there's definitely some form of a gap on a lower time frame that could support, and now you have some clean LR to run through. So I think as long as NVIDIA holds those Wednesday's lows, I am looking for a gap fill up into 218 with a potential vol and bow structural cleanup up into 222. You have really good evidence of buyers. You also have really good support of call flow that's been coming in, and it really just comes down to where Monday opens up. But based off of this and that Wednesday manipulation candle and how you opened up within the next time frames, I would like to see at least some kind of expansion early on in the 218, 220. Now there could be some internal weakness, but as long as we stay above like 199, I want to give the edge for buyers here. Next up on the list is IBM. And I think this one is finally at a really good risk reward. I like the fact that you finally swept this Tuesday low candle that actually gave you a really good rebalance, and taking into account the entire dealing range here from when you had this explosive move up, you're now back into discount. And I think in between like this 230 and like 250, you got about a 20-point zone. I would like to see buyers step up, get a daily close back above 260, and maybe make a run back up somewhere in the 275 to 290 if they wanted to pre-ER, and then we'll see what happens after that. Point is, you have some really good external lows taken with some really nice daily rebalances back into a really pretty discount zone here. And this is kind of what we had drawn out from maybe like a week ago or so. And we were looking for a pop and drop, and now we're kind of in this area. Now we want to see how we react, right? Now that we're at this discount zone, how does price deliver? How does price react? Do we actually find the buyers that initially created the move up? And yeah, that's pretty much it. Hopefully you are taking something out of this. If you do enjoy my watch list, please leave a like, comment, maybe some feedback on potential videos that you want to see in the future. I should have my hood recap on Tuesday, and that's a recap that I really want a lot of you to watch, because not only did we make a lot of money on that trade, but it's how we positioned that I think makes it a very effective recap for you guys to learn from. But yeah, without further ado, that's it, and I will see you guys later. Bye, peace and love, see you.